Hello, everybody, and welcome to our Before the Bell in 3D session. This is Jose Blasco. Today is September 11, 2023, and I am delighted, as always, to go over our preparation as we get ready to trade for the week ahead. I am highlighting the disclaimer in the bottom part of the screen, and I am also about to show myself on the screen so I can say hi here from here. How are you, everybody? Good to see you all. And let's begin. So you can see on the left, I have a chart with the S&P 500 futures index using a daily time frame. We're going to start with that market as an exercise of reviewing our weekly markets. Those weekly markets are also part of our newsletter that we publish on LinkedIn, even though you can also access the newsletter on your inbox if you are registered to it. And again, in that newsletter, we mentioned that we look at 5 key markets, which are the S&P futures. I'm going to start with that one using real-time charts, crude oil, gold, the US dollar, and the back Bitcoin. So most relevant equity index market in the world, most relevant energy market in the world, most relevant metal in the world, most relevant currency in the world, and most relevant cryptocurrency in the world. So again, very important to go over these markets, very important to understand what is happening in those different ecosystems so we can prepare for the week ahead, understand correlations, understand climates, understand all of it. Okay, so we're going to start with the S&P futures. I will come back to this screen in a moment. But before, let me jump into the real-time chart so we can begin our analysis. Also, I'm gonna make a little bit of space on the screen so that way we can see more and we can go over the analysis of step 1, the climate, which we can see here on the bottom part of the screen, which is a sunny climate, one blue and thick dot. Thick means confirm, blue means up climate. Notice that some of the dots may be thin, as you can see here. That's not what we have today. Today we have a thick dot, which means the climate is confirmed. So there is a statistical advantage by going long. There's no guarantee, but there is a statistical advantage given the fact that the expectation in that time frame is that an up climate would typically last 8 candles on the way up, being each candle a day candle. So we are expecting a movement of, let's call it a week on the way up. And this is the very beginning of the definition of the climate with this thick and blue dot. So if you were to look at this on the newsletter instead of looking at it on the chart, it will look like that. So current status, sunny. So we have a sunny climate, count 1. 1 standard deviation, what's normal in the case of an up climate is 8. So this is candle 1 out of 8. So this is the statistical beginning of a climate, and therefore being a buyer carries with it a statistical advantage. Of course, then we need to define where to buy, at what price, where to sell, at what price. That's a different story, but the first part, the first dimension of our 3D analysis is the climate, and now it is defined for you. Second dimension is going to be the UFOs. Okay, the UFOs, which if you are new to what we do, UFO stands for on-field orders. Okay, I will type it just in case. On-field orders, and when they are red, they are on-field orders to sell, and when they are green, they are on-field orders to buy. So what do we know about the S&P right now? Well, the S&P, it's in the middle of nowhere, to be honest. It's in between the green and the red. So if the S&P rallies further and hits 45.95, so we expect now the sell-on field orders to kick in, and we expect the market to go down. If the S&P was to go down and hits 44.71, we expect the on-field orders to buy to kick in, and therefore the S&P to go back higher. So in other words, those UFOs, as you can see with my drawing, they represent the price points on the chart where an upcoming turning point may take place. Which, of course, if you add that information to the auto climate, which we just commented on, so certainly now you know better what to do. I mean, in this case, shorting would be low probability because we are in an up climate. But if you do get an opportunity to buy in an up climate, that would be a delight, at least if your trading plan resembles mine, even though there are many ways on how to trade and you may disagree, and that's fine. I would certainly be happy to be a buyer if I was given the opportunity to buy, for example, at 44.71.75 in this particular climate condition. Again, this is part of my trading plan. The question is, what are your roles, which may or may not be the same as me or may be different. But again, so this is not financial advice, as you can read in the bottom part of the screen with a disclaimer. But at the same time, I am sharing a little bit of an insight on my own trading rules and the tools that I use when trading, the UFOs combined with the autoclimate. I guess it makes sense, isn't it? Anyway, so now that we know the likely upcoming climate and we know the likely upcoming turning points that could serve as entries and exits, 44.71 and 45.95. Now that we know all of that, the next question is, okay, so is it going to be a boring move with a market that is moving very, very slow and does nothing? Or is it going to be something quite explosive and really moving fast and very exciting, or maybe too exciting, right? So that's when we now look at our third dimension that we call expected moves. And to understand expected moves on a daily, weekly, and monthly basis, we do not look at the charts. What we do is that we look at the prices of options and we, let's call it, reverse engineer the options pricing models, given the fact that we can see the real-time price of the options. So we reverse engineer the pricing model, and because volatility is built in the price of the options, so we can extract that piece of information from the options prices and then evaluate in a way that is quite precise, to be honest, what is expected on a daily basis, which is 39 points, on a weekly basis, which is 86 points, or a monthly basis, which is 180 points. So one standard deviation of the cases would produce this type of moves, either up or down. Of course, either up or down, it's dictated by the climate and the UFOs, and the size of the move will be dictated by the prices of the options. So now you know. Okay, so this is the S&P futures. We went over this analysis. By the way, let me highlight, in case you do not have access to the news later, because you are new to our sessions and you want to have access to it. It's free. I didn't say it, but I guess it's no need to say. You can just follow the instructions on the screen. You have a URL, you have a QR code. You can scan it, or you can just type the URL, go to that page, and sign up for the newsletter. So you will receive it in your inbox, as well as you can then read it inside LinkedIn as well, if you prefer. And that way, if you miss the live sessions like today, so at least that information is somewhere written for you, so you can use it. Okay. Anyway, so I took a little bit of time here with the S&P. I am going to accelerate now, looking at the next market, which is going to be WTI crude oil. So let's go for the crude oil. 1, 2, 3, here we go. So what do we have with crude oil? We have an up climate, which is confirmed. A normal thing to happen is 7. We've been in this climate for 9. So in other words, statistically speaking, this type of a move is not sustainable. Doesn't mean it cannot sustain, but statistically speaking, sustaining would be rare. Okay, so certainly while the climate is blue, being a buyer at this price point, it's quite aggressive. It's quite hopeful, I would say, in the sense that a lot has happened already to surpass what's normal, which is 7. We went all the way to 9, and expecting a market which already surpassed what's normal from a statistical point of view, expecting that market to do even more than that. Well, while it could happen, it's as I said, it's a bit hopeful, isn't it? So again, probably very short-term moves, short-term intraday, or maybe even counter-trend trading if you are a counter-trend trader, that may start making sense. But again, so far the climate is still blue. It hasn't changed to red, so we have a little sun there, even though not of caution, because 9 is more than 7. Okay. Now UFO zones, and this is why crude oil may stretch more. There is nothing to stop price until we get to 90.4. So we may get to see 2, 3, 4, 5 more candles on the way up, which is not normal from a statistical point of view. But given the fact that we don't have a red UFO anywhere close by, if we had a red UFO, let's say here, like that, so then of course, you would expect now the climate to hit that UFO, and from there, you would expect crude oil to fall. But we don't have that red UFO I just made up. The real red UFO is located at 90.4. So we may actually end up seeing crude oil continue going higher for a little more, even though it's unlikely. And I would not be surprised to see a red UFO show up on the screen anytime. Our technology it's real time, and so that you will see it on your screen if you happen to be a user of our technology. Now, what else? So 9040 is where the UFOs to sell are. 82.05 is where the UFOs to buy are. So to be honest, we may end up seeing a great level of volatility on crude oil, because if crude oil starts falling, there is a lot of room for crude oil to fall all the way to 82 from 87. So this is a 5-point drop. So that could be quite interesting to see, isn't it? And even more interesting to trade. 1.49 is the expected move on the daily time frame. 3 points, 27 ticks on the weekly time frame, almost 7 points on the monthly time frame. That's the expected move. Next market in line is going to be gold futures. So let's move to gold futures. 1, 2, 3. Here we go. So we have red UFOs and 1960, buy UFOs 1828. The climate is red and thick. So confirm down climate. A normal thing to happen for the down climate is to last by waves of 5 candles at a time. This is candle number 4. So we could see gold continue falling. Now, the thing really is that there is nothing to stop it from until we get to 1928. So we may end up seeing a very overextended climate on the way down, unless some green UFO shows up. And if it does, we will see that real time. But so far, talking about real time, this is real time. So far, talking about real time, there is no green UFO until we get to 1828.7. So we may see plenty of volatility coming in either direction for either gold as well as crude oil. We'll take a look at the dollar in a moment to see if that's the cause, okay? But anyway, so far, we got a rainy climate. Duration has been 4. A normal thing to happen is 5. And on-field orders to sell 1967, on-field orders to buy 1828.7. Speed of movement extracted from options on gold futures, 13 plus points a day, 29 plus points a week, 61 plus points a month. Okay, next one in line. ICE US dollar index futures. So this is a very relevant market to chart and to analyze, because, to be honest, anything else we trade, it's likely going to be priced in this currency, right? So if you trade WTI crude oil, if you trade the S&P futures, if you trade, gold, so on the other side, typically you have US dollars. So what's happening to this market is that it's been running in a blue climate, which is confirmed for 7 candles, where a normal thing to happens to be 5. So in other words, this market is overextended, and no wonder why other markets are overextended, because the currency in which those other markets are priced is also this same currency. So again, you can see, if I could use the word, a little bit of craziness here coming in, multiple markets breaking their statistics, which is the normal, reasonable thing to expect. Well, that craziness is actually coming from a very high level of volatility in the currency. Okay, may not be coming from the market, but from the currency itself. Now, having said that, we have the dollar index in between a green UFO and a red UFO, located at 104 plus to 105 plus. And if the dollar tries to fall and change climate, it may not be able to fall and goes back higher. So we may get to see the similar type of price action that we've seen as the dollar was going up. We may see some continuation of this after maybe 1 or 2 days pause on the dollar. We may get that restarted thanks to that green UFO. So this is something to watch, of course. This green UFO being broken or not is a big deal, because if that UFO does work, then everything is going to continue the same, or likely going to continue the same it has been. But if that UFO doesn't create that bounce, and instead price goes through and starts going lower, well, there is nothing to stop it until we get to 99.86. And that, my friends, it's a very, very big deal, because it's a very relevant size of a move, isn't it? So 7 out of 5, that's the statistics. 7 out of 5 in a sunny climate. On-field orders to sell 105.33, on-field orders to buy 104.24. Expected move, almost copy-paste from the last week, 0.48 per day, 1.06 per week, 2.21 points a month. That's the expectation. And the last market that we're going to cover is the back Bitcoin. And again, I'm using a lot of technology to do all this automated analysis of the markets. If you want to go take a look at our website, so you can analyze, the tools that we have and evaluate if that could be helpful to you as a trader. So I welcome you to go and take a look. Look at this is great. This is why technology is so powerful. Look at the Bitcoin, and if I was to zoom in on this price action right here, how can you read anything into those dots, right? Well, guess what? The technology can, because the technology can process data that a human eye cannot see, right? Volume data, tick data. So all of this is not seen in a candlestick format, if you wish, and therefore you are now being given UFOs to sell at 29,135, UFOs to buy at 24,800. Again, all of this is very critical, very relevant information. So down climate for Bitcoin futures, a normal thing to happen is to last by waves of 5. This is number 6. So we may get to see a change of climate soon, but I would say we first need to see Bitcoin maybe to drop a bit more, and now we're gonna get a powerful climate all the way to 29 from 24. If it goes higher from there, again, we may get a little bit of noise, like for example what happened here, where it was not really decided, or here, until it was decided. Okay, and being decisive or not as a market is a factor of, do you have UFOs close to price, or are you in the middle of nowhere? Okay, that's really what it comes down to. And by the way, I just noticed I was covering the auto climate analysis. Sorry for that. 6 out of 5. Now you can see it here. So what do we have? 6 out of 5 in a rainy climate. 29,135, that's UFOs to sell. 24,800 UFOs to buy. An expected move similar to last week, 700 plus points a day, 1,500 plus points a week, 3,000 over plus points per month. That is what is expected. So we are about to conclude our session here. I would like to add a little bit more information about our courses as well. Just because you've seen me go from market to market, commodities, equities, equity indices, I should say, metals, cryptocurrencies, and you may have traded before, you may not have traded before, you may have traded before multi-assets, or maybe you have traded before one asset only or two assets only. You may need more support to learn more things. Well, I welcome you to go take a look at what we have on our page. The way on how we support our users is by providing trading technologies that gives you an edge and saves you time. And it's all about AI, isn't it? And then from there, you have the courses that teach you how trading should be done with the tools and everything else. And now you have the knowledge. And then with the coaching, which is when we get together live, now we are practicing the trading together. And now your knowledge becomes a skill. And now with the tools, with the apps, now you're in a position to do well. Okay, so that's the kind of like the way we are structured to help you better. So last comment before we conclude the session here about the economic calendar. So we have, in a way, a little bit of a quiet week, even though it may be agitated because we have consumer price index and retail sales. So those two things together have a lot to do with inflation in the US, and everybody's watching for that. Okay, so obviously, unless the numbers are very normal, we may have a little bit of volatility on Wednesday, Thursday. Then, of course, on Thursday, very important in the Eurozone, we have a monetary policy decision statement. So we may have an increase or not of interest rates, and all that interpretation may create all sorts of things. And then also in Australia, unemployment number, which is also quite relevant, as well as in the UK. So again, as always, I always mention that the numbers in the US are probably going to be the most relevant ones from a point of view of creating real serious volatility that lasts in the marketplace. Other countries which are important but less relevant than the US from a size of the financial markets point of view. So they may create just a little bit of, a couple of hours of volatility, and that's it, unless we are talking about something very big. So that's what we have for the week. Pretty simple week, I would say. And before we conclude, I also wanted to point at our book. Again, I always mention that we are so proud of our book. Why are we proud? Well, we have been designated #1 new release in 3 categories in Amazon. Our readers seems to be very happy. With the book, you have access to a course. With the course, you have access to 3 months of UFOs. So again, many tools for you to develop yourself. and take trading seriously instead of do a little bit of a gamble with it. So if you are that guy that you are serious about trading, so you have the tools there with the book, the course, the apps. You have it all there for a very I would say affordable price of a book. Okay. Great. So, my friends, as always, it's always a pleasure to join you on the Monday to start the week together. And hopefully, this summary, this recap, this market commentary is helpful for you guys to focus and be in the right place at the right time during the week. And again, enjoy the markets, enjoy the performance, and keep yourself safe with risk management as always. You guys take care. See you soon. Bye bye.